Welcome back. We take a closer look at today's market action investing today and break down the trades. It's Harry Rady. He is CEO and portfolio manager of Rady Asset Management. John Derrick, director of research with U.S. Global Investors. Gentlemen, good to have you on the program. Harry, let me kick this off with you. How are you investing in these uncertain times, as they say?
Well, our two highest conviction ideas, we're currently buying the TBT. The TBT is the ultra-short treasury. And, you know, if you like gold, if you're concerned about inflation, if you're concerned about the dollar declining, then the TBT is the place to go. On the short side, we're short a company called Salix Pharmaceuticals. The stock is up fourfold on positive data out of a phase 3 trial on a drug called Xifaxan. And we think that some of that enthusiasm is misplaced.
All right. You know what? I'm gonna leave it right there. John, I'm coming back to you with a similar question. Let me just get to John Harwood, though. Right now, he has breaking news. He's in Washington. John?
Maria, we've got breaking news. That is, the Congressional Budget Office has issued its score for Max Baucus's bill in the Finance Committee, which was debated last week. They say it will cost $829 billion over 10 years. That's below the $900 billion, Maria, that President Obama said he wanted. And their assessment, the CBO's assessment, is that it will shave $81 billion off of the budget deficit. That's very good news for Max Baucus. The Democrats on the Finance Committee who hope to pass this bill to the floor representative of the Senate shortly, and good news for the Obama administration, which wants some forward motion, Maria.
It sure is. $81 billion, you said it's going to shave. Now, that deficit is what? How many trillion?
Well, the budget deficit is projected to be $1.9 trillion over 10 years. So this is a drop in the bucket. But the good news for the administration and the Democrats is they're not going backward, they're going forward. All
right, John. Always great info from John Harwood. Thanks very much. John Harwood is in D.C. Back to our guest right here talking about investing in this environment. And, John, what are you doing in terms of the rest of the year with your investing right now?
Well, I think we're in the early stage of a cyclical recovery, so I think you definitely want to be levered to that and investing in cyclical companies, whether it's industrials or technology, energy, materials, et cetera. And it looks like we got, a good earnings report from Alcoa, and hopefully that'll set the stage for the rest of earnings season. So I think we're off to a good start.
So you'd be putting money to work right now?
Yeah, I think so. Yeah, definitely. I think you're in the early stage of a recovery, so I think this is when you want to invest, definitely.
Gentlemen, thanks very much. We so appreciate you stopping by tonight. Thank you, gentlemen. We'll talk with you soon. Harry Rady and John Derrick with us on investing. Well,